In today's video, we are answering the most important question there is. That is Bitcoin still bullish? In today's video, we are taking a look at 5 different topics. The DXY, the interest rate data, the macro uptrend, the structural levels, and the 4-year cycle to answer that question. By the end of today's video, you will have a detailed and well-rounded understanding of not only all of those points and why Bitcoin is very much still bullish, but of course the invalidations for everything discussed. Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we're doing a macro analysis for Bitcoin, going over 5 different reasons why Bitcoin's future is very bright and why we might still see a parabolic season. We're going to be going into massive amounts of detail on all of these 5 points, as well as discussing the invalidations for the points listed. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure, raw TA. If that is the kind of content you are interested in, join us on Telegram. It is the first link down below. You'll join over 6,000 members in our channel over here. You'll get access to charts, updates, videos, educational posts, news events, and everything else you need to know about cryptocurrency, Bitcoin, and the relevant economic news. If you are interested in taking your trading to the next level, we have a VIP sale at the moment. You'll get access to our VIP trading channel and our VIP exclusive group chats. We have over 600 members in there. We post trading setups with exact entry prices, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. Our group chats are as follows: the general chat, the trading chart, education chat, the news, trade setup, help, and daily video chat. Check that out, guys, if you're interested, by contacting me via that message. Without further ado, let's jump on into it. So as we've said, today's video is going to be a massive one. We have so much to talk about. We're going to be taking a look at why Bitcoin is still bullish, what invalidations are there for the bullish narratives, and of course, why we are likely to still see a parabolic season. We're going to be discussing the dollar, the interest rate decisions, the macro structural formations, the macro uptrend, and the 4-year cycle, providing invalidations and justification for everything that we're going to be discussing. We'll also briefly discuss the short-term price action at the end of today's video. Before we get into all of that, jumping over to the market data, 24-hour volume is up 8%, sitting at 122 billion. 24-hour liquidations up 20% at 141 million. Of the 141 million in liquidations, 102 million have come from longs, 39 million have come from shorts. Taking a look at the last 24 hours of price action, Bitcoin really isn't doing too much here, more or less chopping sideways within this horizontal range. If you watched our prior video, we discussed the possibility for a short-term swing upwards to our range high over here. We did see that, but we have since rejected back into that range low again. Very much choppy, very much just moving sideways. We will discuss this in much more detail in our short-term analysis in just a moment. The most important things you do need to be aware of is the fact that Bitcoin is back within the confines of this horizontal consolidation we were in prior to that directional break up to retest our prior support as an area of resistance. Our key trigger points for downward directional moves are going to be the drop or the loss of this current low point, whereas directional continuations upward should occur upon the breakout of our range high, the 2 horizontal levels we are currently chopping between and struggling to move from without. So let's go ahead, guys, and jump over very briefly to the DXY. We'll come back and discuss this in more detail in just a moment. The DXY is currently bouncing from that 100 region, our sell side liquidity. We are looking for a small continuation upwards in a new week to retest that yearly uptrend. Of course, we have now broken down from a year. This is about a 1.5 year long uptrend. The macro implications of this breakout, if the price action is unable to reclaim that trend line, are massive in favor of the bearish scenario. The DXY could potentially come all the way back down to this low 90 region as a consequence of the measured move from breaking down from a massive symmetrical triangle formation. This is an incredibly bullish risk assets, and we'll discuss this in just a moment later in the video. The S&P 500 is still looking very strong. It did close out that week green. In fact, it closed it higher than the prior week's closing price. So again, we're seeing this build up of strength, and we're seeing weeks closing higher and higher. As we have seen now for the last month, it is looking very good. Of course, as we do approach this range high, this prior high point, we are going to run into a bit of a resistance. So we could potentially see that momentum start to decrease. And if we fail to break above here, we could potentially see a directional continuation back into that low 5,300 region where we just chop sideways again. Of course, if we do break from that range high, the breakout over here, we would then expect a directional continuation upwards to our psychological levels of around 5,990 to 6,000. Let's go ahead, guys, and jump into our analysis today. Like we said, we are taking a look at so much. Before we do, if you do want 15% off your lifetime trading fees, building that up to 45% discounts based on your trading volume, sign up with my links down below to any of the exchanges. You'll get this bonus 15% discount on BitUnix, BitGet, or BingX. Again, you can sign to any of them down below. We'll play a quick ad and we'll jump into our analysis. I'll see you in there. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck back into it. And as we've said, there are 5 different things we're going to be discussing. Number 1, we're going to be taking a look at interest rates and why interest rates are bullish for risk assets, and clearing up any misconceptions about the recent interest rate reductions in the past, 2007 notably, and of course 2001. So taking a look at the interest rate decisions, we can see that by an overwhelming majority, we are expecting to see an interest rate cut in September. There's a whole bunch of discussion in regards to whether or not this interest rate cut will trigger a market correction, or if we're going to see it trigger a macro continuation. In fact, it almost seems like people are sitting on the fence, and there are 50-50 in regards to that. To answer that, we need to understand there are 2 reasons the market moves. Number 1, the market moves from an emotional perspective based on what people perceive to have to occur. And number 2, it moves based on a mechanical perspective. What are the mechanisms behind what moves the price of assets? We're going to be taking a look at both of these, starting from a mechanical perspective. If we're looking at the theory behind how markets move, particularly how asset prices move in relation to interest rates, we can look at a very simple flow chart I've created for you to follow. First and foremost, we are looking at inflation. We can see as inflation moves up or down, so this is increasing or decreasing inflation, we see a direct impact on interest rates. We will see interest rates fall. So if inflation is moving down for a period of time, naturally, that will lead to an environment where we will generally see interest rates fall. And that is the environment we are currently sitting in. As a consequence of interest rates falling, or the future perception of interest rates falling, we will see the dollar decrease in value. That is why we're seeing the DXY drop. Now, with the interest rates falling, the macro extension of that is that we see the cost of debt decrease. If the cost of debt decreases, this has 2 impacts. Impact number 1 is on the individual taxpayer, someone like me, someone like you. Impact number 2 is on those entities, those companies that are invested in the stock market, or, you know, have massive net worths. We're taking a look at companies that acquire, you know, hundreds of millions of dollars worth of assets. So we can take a look at these companies and we can see that as debt decreases, the cost of debt decreases, their debt to service ratios decrease. Debt to service ratio simply meaning the ratio between cash on hand and debt obligations over a year period or over a shorter period based on whatever service ratio they are looking at. If the debt to service ratio decreases, this results in, number one, their books, their balance sheets becoming more healthy, which facilitates greater risk-taking capabilities, and number two, it increases their cash flow availability to then facilitate those greater risk-taking capabilities. That facilitates them investing more money into the stock market or into risk assets, housing may it be, cryptocurrency may it be, any kind of risk asset that is, again, going to act as a hedge against a falling dollar, as when the dollar decreases, money moves into risk assets. And number two, since the debt to service ratios are smaller and the debt cost of debt has decreased, they are also more likely to acquire those risk assets on debt because the debt to service ratios have decreased and the debt itself is cheaper. This creates an environment that facilitates rapid expansion in asset prices, which we saw in 2020, which we saw in 2017 even. Taking a look at the retail perspective, as the cost of debt decreases, the debt to service ratios for retail decreases as well. Your interest rate requirements on your mortgages, your interest rate requirements on your short-term loans, all of these things start to decrease, which in turn increases the available household cash flow, which results in increased retail spending on assets. Now, this is the misconception. This flowchart does not happen immediately when interest rates drop. This takes many months to take effect, potentially 6 months, a long time. So when we're taking a look at is interest rates falling positive for Bitcoin, the answer is yes, it is macro positive. On the macro scale, the monthly, the yearly, it will more likely have a positive impact on the risk asset markets than it will not. And that brings us to the psychology component. Will interest rates falling negatively impact the market on the short term? The answer to that is a little bit different to what you think. If we look at the two instances people use to justify markets correcting as a consequence of interest rates falling, what they fail to mention, these are the two scenarios over here, what they fail to mention is that in both instances where we saw the markets correct, the market correction initiated prior to interest rate reductions. In fact, both instances where the markets heavily corrected had attributing black swan events. In 2017, we had the global financial crisis. 2007, sorry, and in 2001, we had the dot-com crash. In both of these scenarios, these mass sphere events drive money out of speculative assets and into cash as a cold storage, as a storage mechanism, as a safety mechanism, and we saw interest rates drop following those events initiating. Therefore, we can identify these as correlation, not causation. In layman's terms, the interest rate drop did not cause the markets to crash. As a consequence, actually, the markets correcting as a consequence of major black swan events resulted in the governments taking initiatives to drop interest rates to enable the markets to kind of absorb a lot of that selling, absorb a lot of that fear. It was correlation, not causation. Now, the problem with this is because it has happened 2 times in the past, people are ignoring correlation and causation, and they are thinking it is causation. Now, if the majority, the overwhelming majority of people expect the markets to correct upon an interest rate reduction, we will see a market correction upon an interest rate reduction, regardless of what the theory suggests. But if we're looking at the macro, we're talking today, is Bitcoin macro bullish? Will we see a macro positive effect? Yes, we will. This brings us over to the next point. The DXY is dropping. This is our point number 2. Another reason why risk assets are very likely to be bullish. This is because, as we can see, as the dollar decreases in value, and we know that the dollar, not on a scale basis, okay, but on a directional basis, when we generally see the dollar decrease in strength, we'll see that money flowing out of the dollar and moving into assets. So number 2, we can see the symmetrical triangle breakdown. If we do see a loss of this low, we could potentially be dropping to levels of what we saw in July 2021, which could facilitate a macro uptrend or a parabolic phase for asset markets in general. That is going to be number 2. We also know that if interest rates reduce, okay, as an extension of a reduction in interest rates, we will eventually see inflation start to rise again, and we know that will result in a weakening dollar. During that process, during that move towards rising inflation, we will see the dollar reduce as inflation pushes up the cost of assets in comparison to the dollar. So that is number 2. Number 3 is going to be the macro uptrend for Bitcoin. The fact that Bitcoin is theoretically, from a technical basis, in a macro uptrend. We're going to look at this from a multiple amounts of different technical indicators, starting on the Gaussian channel. What we can see here is that, yes, Bitcoin has been in a multi-month consolidation. We'll come back and discuss that in a second, but that is a structural point. But looking at our point number 3, our technical uptrend, we can see that Bitcoin entered a uptrend right over here. According to the Gaussian channel, the 19th of January 2023 is when we broke toward the upside, flipping the channel, indicating a macro high time frame shift in the trend. This is when the macro uptrend started for Bitcoin. What we can see is we've now remained above that low channel side the entire time. Therefore, while we remain above that low, as we remain below that high point up until the shift in the trend, we are still in a macro uptrend. Bitcoin is still in an uptrend. So only upon the loss of that low would Bitcoin enter a high time frame downtrend from the perspective of the Gaussian channel. Until then, the high time frame uptrend is intact. That is a very important point for the macro bullish argument. Now we can look at the weekly chart as well as the 2-week chart for 2 other validation points. Bringing up the Ichimoku cloud. This is going to be the 2-week chart, the Ichimoku cloud. What we can see here is that historically, when Bitcoin is in a macro uptrend, and we generally see this occur during the bull run phases of the trend, particularly when we break out the clouds, we break out those high points, we are in a uptrend. Again, we can see break out those high points, we are in that uptrend. You can see over here, break out those high points, we are in an uptrend. Those are our bear market resistances. We can see that Bitcoin remains above the baseline of the Ichimoku cloud on the 2-week the entire time until a very important indicator is printed, and that is going to be our pi cycle high. So you can see that from the point of which, and we'll go ahead and actually adjust these just to actually show the high label, you can see from the point of which we remain above that baseline on the 2-week chart until we create a high, we are in that uptrend. You can see another instance over here. We are remaining above the 2-week until we create that high point. We are in that uptrend, the pi cycle high printed over here in 2021. And you can see in this instance, we are sitting above that 2-week Ichimoku cloud baseline. Therefore, from a 2-week perspective, Bitcoin is in a macro uptrend. It's only upon the breakdown of that 2-week Ichimoku cloud do we enter a high time frame downtrend for Bitcoin, which results in the bear market. And guess what, guys? There's a particular way I can predict the bear market bottom, and we'll show you that in another video when we get up to the bear market bottom predictions. Now, if we're looking at the current instance, we can see we are above that baseline. We have been above that baseline since April 2023. While we sit above the baseline, we are in a high time frame uptrend. So we can also see that baseline matches the 49K support, which happens to be a critical level of support for Bitcoin. And if we lose this level, we'll be entering a bear market. So Bitcoin is high time frame bullish from that perspective. Now there is another perspective we are looking at, and this is going to be our weekly momentum. If we take a look at the weekly chart and bring up the RSI indicator, we can see there is a very important downtrend here on the RSI. Let's just go ahead and get rid of these lines over here. And this downtrend is a representation of the momentum of price action over the past 5 months. And we'll go ahead and line that up over here. As we can see, during the period of consolidation for the past 5 months, Bitcoin has been in a downtrend. If this RSI were to break upwards, we would see a positive momentum shift, which would indicate a directional continuation upwards is likely. Now, what else this is suggesting? It is suggesting that momentum, okay, as a whole, over the past month, during this 5-month period, is starting to decrease in volatility. This is suggestive of potential bearish exhaustion. If we see the RSI break upwards prior to a loss of this prior low point on the RSI, we'll go ahead and draw it in, we are very likely going to see a macro correct continuation higher. If we see a loss of this low on the RSI, which corresponds to this point, which corresponds to our last low on the price action, that will likely result in a retest of that baseline on the 2-week chart. A very, very bearish thing to occur if that were to occur. The reason being is a loss of this horizontal would suggest that the momentum at this point in the price action is now lower. In momentum is another word for strength, right? It is a component of strength. It's one of the many components of strength of price action in comparison to where we were here, telling us that during this uptrend, we have actually been weakening significantly, which could indicate that we are overextended and could result in a correction. However, if we were to break upwards here, that would mean the opposite of that, and that we are going to see continuations higher. That is going to be our third point as to why Bitcoin is bullish. The next point is going to be our daily chart. As we can see, Bitcoin is in a descending channel formation. A descending channel formation is inherently a bullish consolidation pattern. It is a macro downtrend, as we can see, with 2 downtrending parallel lines. However, during the period of this downtrend, we generally see bearish exhaustion and we eventually see accumulation occur, which results in a break of the downtrending resistance and continuation toward the upside. If we take a measured move from point 1 to point 2, we can apply that measured move to the breakout point, and that gives us a target of around $85,000 if we were to break out of the range high of this descending channel formation. Now, until we break the range high, we could definitely continue in this consolidation for a very long time. In fact, this consolidation will literally go on forever until we break the range high or invalidate and break downwards. For a break upwards or an invalidation toward the range low, a daily candle close below the support or above the resistance would suffice. The reason I say a daily close is because we have not seen a single daily close above the high point or the low point of this channel during the last 5 months, and therefore a daily close would be enough of a outlier in regards to what we have seen before to potentially justify us to claim we would see a continuation, and therefore we are looking for a daily close to facilitate that directional continuation. Until then, expect the chop to continue, but understand that inherently this is a bullish consolidation, and the fact that Bitcoin has pretty much been going down for 5 months, yet it is still the same price of which it entered the channel, is an indication of strength, not weakness. This is an indication that Bitcoin, although we have seen the price go down, it is consolidating from a position of strength, not distribution, not weakness. A very good thing to see. That is going to be our point 4. Our point number 5 is going to be one that a lot of people talk about, and not really talked about for a long time, the 4-year cycle. And a lot of people are saying the 4-year cycle are over, the 4-year cycle is done, it's broken. That's a lie, guys. That's a complete lie. The 4-year cycle is actually not done. We can only really know for a fact if the 4-year cycle played out or invalidated by the time the 4-year cycle completes. And the 4-year cycle is a date range trend. All it cares about is when we create those highs, when we enter bear markets, and when we create bottoms. It doesn't care about the process of which occurs to actually complete those objectives. So we could see the price action chop for a very long time and then push upwards and create a high. As long as it creates an all-time high, technically the 4-year cycle has completed. So when I look at the 4-year cycle, I don't use this and say, well, look, the 4-year cycle is the reason why I'm bullish. I definitely don't say that, but it's definitely not a reason to be bearish. And I think what we're saying here, the reason why Bitcoin isn't bearish is because yes, the 4-year cycle still is technically in play. What would invalidate the 4-year cycle is 2 things. Number 1, it would result in a low occurring in the price action during the period of this 17-month range where the bull run is meant to occur, or a failure to create a brand new high during this period. And only at the end of this 17-month period will we know for a fact if the 4-year cycle has played out. Because again, as humans, we like to try to find patterns, we like to find narratives in things that are sometimes ambiguous. And with the 4-year cycle, many people do just that. They try to explain or justify the way of which Bitcoin, quote unquote, should move during these particular phases of the cycle, when they fail to understand the 4-year cycle in essence is simply a method of analysis in regards to the dates between specific events on a macro basis. The dates between the tops and bottoms, the dates between the bottoms and tops. It is simply that. So as long as we remain within this range, we are technically in the bull market phase, and as long as we don't get macro invalidations of the macro uptrend, the 4-year cycle is still very much intact. And those are our 5 points, guys. Those are the points. We've discussed our invalidations throughout there. Of course, if interest rates don't go down, if interest rates go back up, that would be very, very bad. If the dollar goes back up as a consequence, that would be very, very bad. If Bitcoin breaks down from the macro descending channel, that would be bad. If we lose the baseline on the 2-week chart and the Gaussian channel on the weekly chart, all of those things on the 3-day chart, all those things could potentially result in high time frame downtrends and macro continuations lower. But until those things occur, we have to trade with the trend. The trend is your friend until it ends, and therefore we are sticking with what is most likely and what the data is suggesting, and we will remain in bullish until those points are invalidated. That brings us to the short-term price action. As we said, we are in this range. Expect a continuation to the range high, guys. We are at support. We have a bullish divergence over here, very, very good sign. This is a hidden bullish divergence. We are expecting continuations toward the upside. Sorry, this is standard bullish divergence. I've been talking too much now. We are expecting continuations toward the upside. Again, don't expect macro moves upwards until we break from these ranges. Don't expect macro moves downwards until we break from these lows. Until then, we are in this chop zone. Trade it as what it is. Take it at face value. Don't try to predict, simply react. Thanks for tuning in. Catch you guys in the next video. See you then.